Hey, it's Bill Gross, the LA probate expert, with my weekly real estate insights. And today we're talking about buckle up for another brutal spring housing market. What do I mean by that? Well, this week, Fortune magazine in the real estate section has a headline warning buyers, buckle up. Exactly, for another brutal spring housing market. It's an interesting choice of words, I think is a very accurate choice of words for where we're headed and why we head that way. So the first thing to note is that the inventory remains, by historical standards, very, very tight. The buyers do not have, like everything else in the economy today, there's less product on the shelves. There's less cars to choose from new, less cars to choose from used, less computers available, less of everything. And you can see the inventory is still declining, even though the market is slowing down a bit in sales and well below historical norms, even though our population is going up, even though the net wealth in the world, unless the United States, even though the wealth is going up, even though the stock market's corrected, it's higher than it was a year or two ago. And there's more money in the world, more money in the economy in the United States. There's just less houses to buy. And that's what's been driving the housing prices up so dramatically. So even though that's still the fact, the other major factor in the real estate market has been interest rates, that for any amount of price that somebody wanted to pay, the monthly payment would buy a certain amount of home. As rates went down, that same monthly payment bought more homes. So motivated buyers would buy more property as a result of a higher sales price. And that has now turned around. We actually hit hit the bottom of rates at about 2.75, and today we're about 3.67, 3.75 on a 30-year fixed rate, almost 1% over a year ago. So if this was a primary factor driving buyers to pay more, you can imagine the reversal will push them back to paying less. And so that's one of the key factors going on in the market as well. So let's look at this from a buyer's perspective. I talked about this the last couple of weeks. Fewer homes to buy, yet those that you can buy are now higher priced. What could be more difficult than, it's not as bad as toilet paper 2 years ago, but it's the same idea. It's going to cost more, and you have to wait in line to get it or fight to get it. And now we're starting just now. These rate increases have really gone up week after week over the last 30 days. But as it started about 30 days ago, we already started to see the reduction in sales prices. And take a look at the numbers from December versus last year. We have just the tail end starting to go back down to below most of the pandemic period. And even though it's higher than it was before the pandemic, keep in mind we lost these months during the pandemic. So those people wanting to buy still have not yet filled in the missing inventory. And don't forget, we have more people. Don't forget, there's more money in the market, and yet slightly less homes being purchased. So we're starting to see the effects of the increased interest rates and the decreased inventory. But this is going to continue, because consider if you're a seller, maybe you put your house on the market and after 2 or 3 weeks you got offers. Now you're out to look to see what you can buy if you're trading up. Well, the trade-up sellers will go out and realize less houses to buy, more expensive are available on the monthly payment because of interest rates. And some of them, and I've already seen this, will pull back and say, you know what? At that price we don't want to buy, we'll just stay put where we are, taking another house off the market. There are buyers, and I think there's different phases. There's buyers who are in escrow, who are ready to close but haven't locked their rate yet. And as the transactions get delayed and they're faced with increased payment, are going to balk or ask for sales concessions on the transactions. There are buyers in escrow who've not yet locked in their rates, who are shopping and got into contract at 2.75 and 3%. And now they're at 3.5, 3.75, ready to lock. The payment's gone up. And some of those buyers are going to walk. Some of those buyers are going to ask for concessions. And you have other buyers who haven't even gotten to escrow yet. They're still out shopping with a pre-approval from last month. And their budget based on when they met with a loan officer of 2.75%. Once they get the offer accepted and they rerun the numbers and new rates, there will be buyers who are more particular on inspections, less likely to waive contingencies, and back out of deals when they realize those payments. Literally, I talked to a friend of mine who's an agent buying property in another market who this happened. He didn't even realize the rates had gone up because he had made offers on property that he didn't get, and then he realized, wow, I really dodged a bullet. What does this mean, though, overall in the marketplace? Well, I do still think that housing prices are affordable. There's a great analysis in Calculated Risk, which is a great blog. He takes the prices available even now and based on the incomes and shows us that we're still in the middle of the norm of housing affordability. There have been periods of time where people paid much more of their monthly income to get properties than we are now. So that suggests, that's another factor I think that suggests we're not going to see a housing crash because absent inventory, prices can't go down that much that fast. And if they did, the rates would go down as well, and that would re-trigger the whole process all over again. But what I do think is you're going to have buyers tighter because they're paying more. Many sellers tighter because the house they're going to buy is costing more. And that's going to cause friction in the industry. And that's going to cause the same problem we experience at markets. We experience buying cars. If there's less inventory, the prices are going to go up, but there'll be inevitably less activity, less transactions as a result. So what should you do? Look, if you want to buy a property, make sure you check your current rates. Work with a great lender. I work with some great ones and I've worked with some bad ones. Let me introduce you to a great one who will take care of you. Make sure you know where rates are today and make sure what you need to do to lock it in and how long you can lock for. Make sure your contract covers you so you'll get stuck into a house with money at risk and then you find out that you can't lock your rate and close at the budget price that you expect to. As a seller, if you're trading up, let's get you protected on your purchase or let's get you protected on your sale. You can't get caught in the middle. You don't want to be the seller who sold a property hoping to find something unless you would take some time off. But the possibility is you'll be stuck in a house sold and you won't have a house to buy. And with tight inventory, prices won't drop that much. You might find yourself unable to get what you want. So if I can help in your way, call me, text me, email me. My information is on the video down below or apply this email. I'm Bill Gross, the LA Probate Expert. And as always, make this week your best week ever. Thanks so much.